All right, guys, what is going on? What is good? What up? What up? Hope you guys are doing blessed today, man. It has been raining the last few days. It's been very, I don't want to say groggy, but very close to it. Very close to it. I've been upgraded to tier 3. Let's go. Let's go. We got about 50 more before everybody hops over. So 52, I think. So we'll see. We'll see how it goes. What's good, Beverly, Naruto, 2020, Sean, Maximiliano, Nina, Stephanie, Vadu, Akinola. What's good? What's good? Man, I released that video of the Dow Jones from quite earlier today, about an hour and a half ago. Not even. Yeah, not even an hour and a half ago. And I want to continue on with the thought process from yesterday. I can't tell. I don't remember if we talked about it on the session or not, but I know in the market review from yesterday, I did talk about, I briefly touched on regular trading hours and the electronic trading hours. So we'll continue on with that thought. Drop a 1 if you guys are here and you can hear me and the sound is good and all that before we get into it. Drop a 1 in the chat if you can hear me and if all is well. I feel like we're starting to get more people on here, and that's exciting. That's exciting. That means more people are learning. I like it. I like it. Okay, cool. So here's the thing. I recorded in regular trading hours, and I would have kept it going had I switched back to electronic. So that was probably my mistake. But here's the thing. When I'm recording, I try as much as possible to not touch the screen, because I don't want to like keep, like, say something flashes on the screen, like, I don't know, like say I click an app on a computer or a program and it comes up on this screen. I got to go back and like clip that half second out and shit. I hate doing that. So I try to minimize messing with the chart as much as possible. So I didn't want to like sit here and fidget with regular trading hours, electronic, and back and forth. So, but again, if you watch the video, what you'll see is this. On a 1 minute time frame, you'll see this, right? And then there's nothing over here. Just this. However, when you go to electronic, we have this. And honestly, I feel like if I saw that, I would have kept the recording going. And then it would have extended up to that, and that would have looked much better. But in either way, that was it right there. So I'll talk about this a little bit, and again, continue on with the ideas from yesterday about that. So that would be our focus for today. As far as what we have for the afternoon, I think it's hard to say. And you already know that we're on a pretty massive, I wouldn't say winning streak, but we've been right quite a lot already. And I know that winning streaks are going to end. You know what I mean? So I know that at a certain point I'm going to be wrong. Like, I'm going to be wrong. Okay. I think if I tried to press the skill set today, I think I would be wrong. And so I'll still give you my idea though. If I had to pick a direction for today, I think it's going to be short. I think it's going to be short. However, I could easily be wrong. Okay. Now, I was watching this earlier. Okay. I was watching this earlier, and I was obviously flipping through the time frames and regular trading hours, electronic trading hours. And Dennis, I'm going to get to that, right? What is the advantage trading on regular trading hours? So regular trading hours has limited information. And by limited, I mean it's only going to give you the information from 8:30 until I guess 3:10. Okay? So from 3:10 all the way until 8:30 the following morning, you are not going to have that information. Which is why when you switch to electronic trading hours, that's when you're going to get all of the information. So the reason why, if I had to pick a direction, it would be short. Even though that may be wrong. The only reason I say that is because of yesterday's lows down here. And to me, this morning, I screenshotted this at 9:35, like this would be a good short. And it was, until it wasn't. So it gave a nice reaction. And then by the time we traded back into this imbalance here, I was like, nah, that's toast. And I'm on the wrong side. Switch bias to long on Dow. Okay, but I'll, again, let me try and give you some more information here. When we talk about liquidity, what we say yesterday? When we talked about two sides of the market, what did we discuss yesterday? If we can justify a long and if we can justify a short, what type of condition does that put us in? What type of condition is it when you can justify both sides of the market? You could long, you could short. Is that high probability or is that low probability? What is the case? While I finish my breakfast of a sparkling ice drink. Or lunch, rather. It is the afternoon, PM session. Gambling, says Cameron. Low probability, says Naruto, Alex, Nina, Maximiliano, and Dennis. Right. So, me looking at this morning, that's pretty much what I saw here. Like, with only this information, that's what I saw. I'm like, okay. Afternoon, like an intraday session high taken during the morning. We trade lower, we leave an imbalance. So like that could have been a short right there, or like even here. And I'm like, okay, well, we might run for these lows. And I even said that in the Discord, right? So obviously, you know, I'm not hiding from that. I said 4250 is what I anticipated. And then so once price trades about 1010, like right in here, I'm like, yeah, I'm wrong. I'm wrong. Okay. Now, why would I say that? It's only coming back to the imbalance, John. It could still trade lower. I don't agree. Okay, I don't agree. But let me tell you why. And I was going to short this and I didn't. But let me tell you. The last few weeks or so, and it's the most recent member-only video that's actually longer than like 15 minutes. Recently, we've been talking about premium and discount, right? Premium levels, discount levels, and then fair value levels, right? If you take a look at the range of this high, okay, the high that's like swept this previous day's high or previous session high, okay, and then drops down and rallies here, that is the current range I was looking at this morning. Okay, so you have an imbalance here that is slightly in a premium, so that's okay. And it's not the greatest, but that is okay. When it left an imbalance as well, just on a 5-minute time. There's a 1 minute in here as well. And so for me, I wanted to short that because I felt like, you know, I want to be a part of the move, right? And then I say, wait a minute. Where are we at in the range? Are we at a premium or a discount? This to me is it is a discount for longs, but it is not a discount for shorts, meaning you're shorting in the lower range, and that's not ideal. So I let that go, and then I saw it fly, and I said, oh shit, well, that's good. So I'm wrong about shorts. That's fine. Let me switch the bias. Okay. And that's why this imbalance here at 9 o'clock, you see extended. Okay. You see that extended. It trades, it respects it, and then disrespects it, and then respects it to go higher. So that was interesting. But the whole time I was recording Dow, I was watching Dow, so I didn't really see that. But this is very important information. Okay. So the fact that we didn't run the lows, that's fine. That's fine. You know who did? The Dow. The Dow did. Definitely. So then you go, okay, what makes this a mitigation, John? You're like, I don't see how this is a mitigation. I don't see that. How do you come to that conclusion? There's a lot of shit we got to ring in today. What's good, Willow? Welcome. Welcome. We were looking for you yesterday and Monday. We missed you. I was trying to talk some shit and you weren't here. But anyway, one of the smart money trading rules is I do not short below old lows. And just equally, I don't like to long above old highs. So take that idea. Okay. Well, we have old lows, and then we don't want to short below that. Right? But you could long below old lows. But I don't want to short below old lows. Okay, so what's going on here? Well, the information gets way more important at 10 or 9:57. Okay, at 9:57. And then this is also why I had mentioned something the other day to somebody on Twitter. They didn't respond, which is not a surprise, but you know, I ain't gonna rub it in people's faces that I'm right. I used to do that, but not anymore. But they said that a stop run is always deep. And I said, that's not always the case. A stop run is not always deep. That is false. That is false. Okay? I don't like seeing false information. I'm not saying I've been right 100% of the time the last like 6-7 years I've been teaching, but you know, when I see something that's obviously and blatantly wrong, I have to say something, because now you're damaging the community, right? A stop run has to be deep. No, it does not. Okay? No, it does not. This right here. This right here. Boom. Okay? Lows. Swept. It's not a lot. It's not a deep retracement. That's shallow. Okay? We trade through that. Back into these up candles here. Now I started recording right there. Price rallies and then comes down. As soon as it comes down and finesses that, you see me draw a pink line right there. What is a pink line always represented? What is it always represented? A liquidity or a liquidity run. Right? So what do you think I'm telling you as I drew that out? What do you think I'm telling you? That's a stop run. That right there is a stop run. What else is it trading into? We'll take this off because you already know it's there. And you can watch the recording if you want to. So we'll leave that alone. But how do you know? We'll look at it, fam. Everybody knows at this point that the mitigation model requires not just a mitigation, but a imbalance within it as well. Oh, look at that. Look at that. Imbalance overlapped with a mitigation. It's just running a short-term low. It's finessing anyone who's been long that trails their stops. So as soon as it came off of it, I said, oh yeah, that's a stop run. And then what do you see happens next? It runs for the TP that I set in the video. It runs for that. It doesn't just casually go there. It fucking sprints for that. Man, you know, John, what the fuck, man? How can you, tell price is going to get there? How can you be able to get in right before the move? Well, first of all, my friend, I started recording here. So in a sense, this would have been drawdown unless you entered later, which I didn't record that. I just recorded the original, like from here. You would have taken drawdown, but if you recognize, oh, that's just a stop run, you would have let it go and then bam, it runs to your TP. Okay. But study this. Okay. Run on liquidity and then a run on liquidity, right? What is up here? What is up here? Well, you got to look at it. I wouldn't say hidden per se, because it's not hidden, it's there, but it's just maybe not as obvious as I would typically want it to be. But right there is equal highs. It's right there. It's just like those road signs that you see on the side of the road, you kind of don't pay attention to, but you know that it's there. Well, same shit here. You know what I mean? It's there. You just got to know what you're looking for. So now does it make sense? I know I'm kind of all over the place because it's a lot of shit, but I'm trying to do my best here. Let's circle back, baby. Let's circle back. What'd we open up with? Not just premium and discount ranges, but we talked about liquidity, right? If there's liquidity on the downside and the upside, that's not high probability. But if liquidity's been swept on one side, and then there's open liquidity on the other side, oh, right. So what are the probabilities? Well, it's showing a willingness to go higher with that break of structure. Not that that's always required, because it's not, but right there. Right there. Okay. A stop run, I'll say this one more time because I just want to make my point clear. A stop run does not have to be deep. Okay. Some of these guys on Twitter or girls on Twitter have like 10 times, 20 times my following, but they're wrong. That's what bothers me too. You got 20,000, 30,000 people and you're tweeting some stupid ass shit. But anyway, run on the lows. We have open highs. Are we going to chase price going higher? No. We want a long on the way down. You had two opportunities here, or even like right there, which, I mean, I feel like would have been really phenomenal, but in bullish markets, down candles get respected, right? Well, there's that. Not hard. Price action is not hard. Okay. The hard part, when you learn how to do this shit, the harder part is taking the trade, trusting yourself to hold on to it, being patient enough to wait for a setup, and not do dumb shit in between. That's the hard part. Everybody thinks the hard part is learning how to predict markets. That's the easy part. If it wasn't easy, I wouldn't come on here every day and almost finesse this shit every day. Every week at a minimum, because I don't do it every day. And I get it wrong. But in a general sense, there hasn't been 1 week this whole year, or 2022, or 2021, that I have not been able to tell you where it's going to go ahead of time. That's the easy part. The hard part is going, oh man, here's a good setup. I want to put the farm on it. And you misinterpreted that setup, and then it claps you and you go, oh man. So yeah, sometimes the hardest part is yourself, not the markets. So don't forget that. But anyway, that was the justification this morning, right? in the Discord, I said I wanted to, see downside. We didn't get that. And I didn't see anything over on the S&P side. The only thing I saw was Dow. So that's what I rolled with. And that's how you get nice movement. And this is another thing, right? This is another reason why I tell you guys to stay off of Twitter. Only watch one pair, one time frame. Only watch one asset or one time frame. Okay, well then your fucking ass would have missed this. You would have missed that. Because what did the S&P have other than this singular high at 830? And I guess maybe this bad imbalance, but okay. All the indices are not the same, dude. They do the same things, but they are not going to set up the same. One can have equal highs where the other ones don't. So if you only stick to one asset, you're going to miss out on a lot of information. You're going to miss out, dude. You're working with limited information. So that's all I'm saying, man. That's all I'm saying. I try not to get into arguments with people, but I come on here and I tell you guys that, yeah, these people tweet dumb shit. I've probably tweeted dumb shit before too, but if I know, then I won't. That's why you never see me do that. I don't think you've ever seen me tweet, yeah, just watch one asset and that's it. I don't think you've ever seen that. I don't think I've ever said that. Because to me, that's retarded. Okay, well, excuse my French. I know that word might offend people, but that's stupid. That's dumb. That's ignorant. You're not going to get all the information. And I guess the best analogy for that is, I guess like the courtroom, right? Y'all watched Law and Order and these other law shows, right? And you guys know that there's a process. There's got to be evidence. Everybody's got to present their evidence. They do cross examinations, they ask questions, and to work with everything, right? They want to know everything that happened, all the details, what time, prints and DNA and all that shit, because they want to come to a conclusion of what actually took place. They're working with all the information that they can get. It's the same thing in trading, bro. There is a point where you're going to have too much information. If you've got 20, 30 indicators on your chart and it looks like a bowl of spaghetti fucking spilled over on your desk, that's not going to be good. But I'm saying information as far as what I believe you should be looking at. Oh, I'm just going to watch Dow. That's stupid. I'm just going to watch Euro. That's stupid. In my humble opinion. Okay? But I've said my piece for today. Okay? I've said my piece in that regard. So we'll watch it for a little while, but again, I think I could be wrong about downside. But if I was forced to have a position, I would be bearish. Okay? As far as what the Dow has done today, I think it's in a interesting place because we took yesterday's low, obviously, and then we took I'm not going to say yesterday's high per se, but we did take a very important high from yesterday, and now we're in the middle. See that? So we took the downside and took the upside, and now we're in the middle. So to me, I think this could be a coin toss. Could be. I think Nasdaq, I did see some individuals shorting Nasdaq earlier today. I'm not going to judge anybody for what they do, but what I will say is Nasdaq is our strongest index today. So I think trying to short The strongest index is not as advantageous. So I would probably avoid Nasdaq shorts. And I guess if I had to say, it would be S&P. I would focus on. Does that make sense? Have I made my case today? You know, what do I know, man? What do I know? The only thing I know is I know nothing. And Willow, that was my guess yesterday. I did say that you were probably dealing with baby pips. So, still batting 1,000, it looks like. Other than me being wrong on S&P this morning. Bias, at least. How important is the higher time frame for your trading? It's very important. Higher time frame is very important. But liquidity is also important too. That's the thing, man. That's the thing. Some people say, oh, if you don't have higher time frame bias in mind, you're gambling. Another retarded fucking thing to say. Another stupid ass thing to say. Now, I can agree to some extent that having a bias on the higher time frame, I think is generally important, yes. Is it important for every single trade? No, fuck no. How many days, how many times have I shown you instances where you could have went long in the morning and short in the afternoon? All the time. There are multiple opportunities to long or short almost every day. You don't need a higher time frame bias for that. That's more so timing and liquidity, of course. But we've seen higher time frame, let's say bullish price action, but be able to short on an intraday basis. So that's why I said I could probably write another book just based on dumbass tweets I've seen the last like 2 years. I could write a whole book on that. But I don't want to do that. I'm trying to be more professional. I'm trying not to be, I'm not trying to be my old ways, okay? I like to have fun, but dude, come on. Work with me here. Work with me. So, Dennis, it is important to a certain extent, but it's not required for every trade. Appreciate that, Naruto. Yeah, growth, man, social media growth is hard. It's hard as fuck. It was easy the last, I would say, from 2019 to 2020 and maybe 2021. I had a fat run up, thank God for Trade House and the community I was a part of for a long time. That's what shot me up to I shot up to like 8,000 and then I stopped. I've halted. Over like a year, I went from 8K to 9K, and I have been stuck at 9K for a long ass time. It is impossible for me to get to 10K right now on Instagram. It's fucking hard. I mean, my reels used to get 20, 30,000 views. I'm lucky to get like 3,000 now. So, yeah, I don't know. But one thing I do know, and this is why I said earlier this year that I told you, I said I would put 20,000 on the fact that we would grow by the end of this year. Because I knew, hey, in 6 months, in 7, 8 months, this is going to be bigger than where it's at. Because here's my belief, okay? I believe that if you step out into the public arena, right? This is all public. I believe if you step out in the public arena and you show a skill set, I don't take every single trade that I look for. You guys know that, right? Like say today I'm bearish. That doesn't mean I'm going to pull the trigger on taking a short position. That doesn't mean that at all. Right? Every trade that I look for, or like I get directional bias that I have, I don't directly trade. Okay. But I do believe that if you step out into the public arena and you show a skill set, you're calling trades in advance, you're calling direction in advance, and you're able to teach people a skill set to now where they can do it, I do believe that you can grow on social media that way. But I called all this out too. When we released the sniper course, after like a few months, everybody started to put out their own course, and there became like this big competition for education on the smart money side, right? Or institutional trading side. Nobody says that anymore, but that's, it was popping off a few years ago, institutional trader, whatever. And I mean, I saw like a bunch of fugazi shit. I saw a bunch of like retarded, like people that weren't profitable were selling courses, or, people would blow an account and then go try and put a course together. Like, it was just honestly disgusting. But what it did is it started to divide the attention of, I would say, not just the trade house, but of a lot of organizations. I mean, look around. Look how many people left over the years. Look how many people separated. Look how many people are doing their own thing. I'm doing my own thing here, right? How many people have you seen go off and start their own thing? It happens all the time. All the time. Right? And so with that, and again, I was telling everybody this as it was happening, because what would happen is we would have our schedule on the old platform. We'd have our schedule. And then what I noticed is people would start doing Zoom calls, which is not bad. But then what happens is you've got the schedule for the company, and then you have the Zoom calls, and then they started to overlap each other. And I said, well, what the fuck, man? Why are you doing a Zoom call when I'm, going live? And it was all like, well, it's all about abundance, bro. It's all about abundance mindset, man. And all that fuckery. And I'm just like, no, you're being an asshole. Because you're trying to take the attention away. And of course, 2 years later, as expected, everything fucking crumbled. Everything. Well, maybe not everything, but everything went to shit, bro. How many rank up flyers you seen the last fucking 2 years? How many? How many people left and did their own thing? How many MLMs have you seen fucking pop up the last 2 years? Again, it was all divisive, bro. The attention was being taken away. And I said, shit is coming. Shit's about to hit the fan. It's all good, man. Don't worry about it. Don't worry about it. It's all good. The fuck it is. Maybe there's a slight chance, just a slight chance, that I might know a little bit more than just trading. It's just a possibility. Just a little bit, bro. That's all I'm saying. So, Now, here's the thing, too. Why would I do that? Why would I say something? Well, if you don't say something and something happens, well, then you have to share the blame, because why didn't you say anything? When you say something, it pretty much clears you of almost any fault. For example, if you're standing out in the street and there's a big water puddle and I see a car coming down the street, I would say something like, hey, you're standing next to a puddle of water, you know, don't get wet. And that person might be like, whatever, man, it's cool. Don't mind your fucking business. All right, no problem. And then that car comes by, splashes the puddle, and then that person gets all wet, right? And then they want to be mad. It's like, bro, I fucking told you that car was coming. I told you. But you didn't want to listen, right? And now you're all wet, looking like a dumbass. I am not at fault because I told you. But now if I saw it and I didn't say anything, that person could be upset. Why didn't you tell me that car was coming? I would have got out the way. Right? So to me, it feels good to have said something multiple times. That way nobody can ever say that I didn't say anything. Man, John kept to himself. He didn't say shit. He didn't give recommendations. He didn't you know, things could have been different if he fucking said something. Well, nope. That is not the case, my friend. I told you it would happen. I told you what would happen. Oh, you rarely see me looking at the daily chart? Well, because on an intraday basis, when we, Dennis, when I come on here and analyze charts with you, we could. What the? Sorry, the fucking music was doing something. We could. In the market reviews, I think sometimes I do start on the daily. If there was anything that I would incorporate for today, is the dollar, because and I talked about this in the market review, we have a raging dollar. Okay, the dollar's been moving higher since mid-July. We've just been running and running and running. So you can see that. I don't want to say pressure because that's not the right word, but you can just see that with that rising dollar, indices have been getting crushed. And so to me, I'm really not looking at anything over here that would help me understand that this would be a low. I lied. Other than, I guess, this weekly gap here. That's on SPY. Okay. So you do have that, which I guess we traded into yesterday. Does that make sense? But even with that there, we still have lows here that are very clean. And so to me, when the market sets a bottom, it almost never, trying to choose my words carefully, it almost never just leaves equal lows like that for a really, really long time. So kind of like yesterday, remember in here on ES, we looked at this and I said, that's probably not our low. That doesn't look like a solid low. And then what happened in the afternoon? They fucking got wrecked. It's the same idea. When you see lows or highs in the marketplace, sometimes you can tell like that's probably not it. And I'm looking at this and I just don't think that that's going to be our low. Now it could be, don't get me wrong, it could be. But in terms of probability, I just don't think that is. And so to me, I would rather see that ran than to believe that this would be our low to long. Like, I'm not going to long this. Okay. Now, if I'm proven wrong, then I'm wrong. But, you know, you want to find good setups and good trades. You don't want to just try and take everything that you see. And so I'm trying to incorporate a little bit of discernment into, you know, these ideas. So the daily is great, but it's not always required, especially for intraday runs on liquidity. And Nikki did call the dollar back in July on a monthly time frame. That's what I think it was. If I'm not mistaken. That was a long time ago. My memory's not the greatest. You guys do know that. You guys do know that. That was back here. And I think it was at the low, and she was saying something about the monthly close. And, you know, my fucking ass was like, I'm going to wait for a reaction because I don't know. We got a reaction, and then that was the imbalance inside the imbalance below an old low. I think I did a stream on that too a long time ago. Right? Because I talked about how this imbalance was below an old low, and I said, how do you know which imbalance to use? And I pointed that out, I think. But yeah, I'm pretty sure that was Nikki who had said something. And obviously it went well. Because it's up like 6-7% from there, which is a lot. So yeah, I would agree. I would agree. Anyway. We all have, I'm just I'm cycling through, looking at these lows here to see if there's anything that's different, but they all have slightly higher lows here. So I wouldn't be too concerned just yet about anything in here. So anyway, you guys have any more questions? Man, look, I cannot wait to start doing some streams about business and entrepreneurship. For real. That's just going to be fun. So, in case you guys didn't know, right? The memberships here. You guys know that when you have a membership here, I make money from that. Right? So, in the back office, it is official that I have made more money every month for 6 months in a row. Right? So that's growth month over month for 6 months straight. We're in our 7th month now. So we'll see how this goes. But that's 6 months of consecutive growth, which is great because hopefully it keeps going. Not just obviously for making money's sake, but for sake of business, right? Because how can you teach somebody, let's just say, for example, how to run a YouTube channel? How do you teach somebody how to run a YouTube channel if you don't have a channel yourself, right? So how can I tell you about consistent growth on a, let's say, YouTube channel if I don't have that myself? So I don't know if it's going to be 7 or 8 or 12. I don't know. I don't know how long the run is going to be. Because here's my honest opinion. You want me to be, well, I'm always honest, but if you want me to be open and honest with you, bro, when it comes to the membership side, I can see December being a month that does not grow from November. I could be wrong, but I could see like October, November, and then December declines a little bit. I could see that. Only because there's multiple reasons. Number one is my trading personally slows down a lot in December. That's number one. And I might even cut the streams a little bit in December as well, because there's not going to be any point in streaming 4 times a week if I'm not looking for anything. So we'll see what we do when we get there. But on top of that, you also have the holidays at the end of the year. So you have Christmas. I know not everybody celebrates it, but it's a world, worldwide recognized holiday to some degree. Okay. So you have the December month, trading slows down. Volatility does sometimes slow down as well. You have Christmas holidays and like Christmas and other holidays, because I think Hanukkah's in there somewhere. And then you have New Year's, right? So people want to buy fireworks, Christmas presents, birthday presents. I don't know if there's presents for Hanukkah. I'm not sure. I don't celebrate that holiday, but I'm just saying there's multiple factors that could lead me to believe that December would be slightly lower. Unless I'm wrong. Do you guys think I'm right, or do you think I'm wrong? Do you guys think we would grow in December or no? How do you spell December? Oh no, I got it right. I just didn't capitalize the D. What do you guys think? That'll be our question of the day. Do you think this channel, do you think our memberships, our community would grow in December? Or do you think it would take a pullback like this? Like a pullback. What do you guys think? What is a good book to read? Documentation for trading as a business via trading as a hobby. Maybe if someone gifts themselves with your membership for the holidays. You know, I kind of got excited when I saw that you could gift memberships, and then I noticed I think you have to buy 5. Unless I'm wrong, but I'm pretty sure when I read it, it said you have to have, or you had to buy a minimum of 5. And I'm going, okay, well, if they are 25 a piece, that means it's 125 like plus tax, so probably like $140. So, you know, I don't know how many people would do that, but hey, if you want to do it, go for it. Go for it. As far Stephanie, as far as a book that is specific to documenting your trading as a business, I couldn't tell you. I don't know. That's, to me, that's more of the journaling side. That's more of you treating it like a business. You know what I'm saying? Yeah, I agree, Naruto. I agree. People have more free time and want to make changes for 2024. That's a good point too, Max. That is a good point. Depends on how you market it. Some people get excited about a new year coming up and want to try new things. Yeah. Well, that's, see, I did. Okay, they all took the lows. I did include a like 30, I think it was like 45-second clip at the end of today's video that, you know, promotes to join the channel, the membership. So I'm getting better at marketing, but listen, I'll give you a business lesson today. And I've said this time and time again. The greatest marketing there is, in my opinion, it's been proven by other people too, but the greatest marketing is word of mouth. Period. It's word of mouth. It's not spending half your fucking budget on ads and, you know, try and promise people the world, rent a fucking Lamborghini and all that dumb shit. I mean, that works to a degree, but I'm not doing that stupid ass shit. But word of mouth, to me, is far greater. Who are you going to trust? You're scrolling through Instagram and you see some idiot with a Lamborghini and all these Alex Hormozy texts all over the screen and money flashing in the background and all that dumbass shit. Or are you going to trust, say, your friend who goes, hey, man, you know what? I'm not the perfect trader, but I've learned a lot from this community. And we've got a growing community, man. We've been around for almost a year. And there's this, bald guy who goes live a few times a week, totally for free. But, we've got a mitigation model and I'm learning what that is, and I'm getting better at predicting price. And I've even taken a couple trades that went well, and I'm really learning some things. And I think you should check this guy out. You don't even have to get a membership, but just, hey, watch him for a couple of days, watch him for a couple of weeks. And if it's something that you think you could see yourself joining, then hey, you could just sign up, man. It's only $25 a month. You could sign up and really learn the markets. What are you going to trust more out of those two scenarios? The seasonality part of the recipe as far as the channel growth, I see nothing but steady growth as team members continue to share the value we get here. Well, that's the thing, Pierre. That's the thing. That's what I mean by word of mouth. It's not just you. Like say you guys admitted to me before that you were at a job watching YouTube. Not that I would want that, but if you're at a job, you can tell your coworkers like, hey, this is what I'm doing. This is what I'm learning. Your coworkers and your friends, they're going to trust you more than an ad. Hell, it's even be very, very careful. And I'm not condoning this. I'm not telling you to do this, but I used to do this. Okay. So matter of fact, we'll just go ahead and say it. Don't do this. But what I used to do is I would be up on a trade and I would show my coworkers. They'd be like, what is that? I'm like, well, this is the euro or this is British pound. And, I bought it down here and it's up here and this is how much I make, or this is how much I'm up right now. And they go, oh shit, that's cool. And I go, yeah, I'm on this forklift moving these stupid ass boxes around, but I'm making money on my phone too. But that was before, the YouTube and the last company I was with and all that shit. I was still really underground, like nobody knew me. So I was like, yeah, I can, press buttons and make some money on the phone, no big deal. And then what really got me, I said this before a long time ago, multiple times, but I would freak people out because I would tell them like, I think the Dow is gonna either rally or go to shit tomorrow. And then it would do that. And that freaked people out too. You'd be like, how did you know that? Just be like, look, bro, I've been studying this shit for a long time. And this is what I want to do. That's what people trust. And here's another thing too for sales. Not that I wanted to get into the topic of sales today, but what you got to do is you don't just walk up to somebody or walk up to your friend and immediately try to sell them on something. Hey bro, how you doing? You good? All right, cool. Hey, go sign up for this membership. Like, no. That's the wrong way to do it. What you do is you give it time. You slowly mention things. Hey man, what are you doing? Oh, I'm watching this guy on YouTube. Oh, that's cool. A couple days go by. Hey man, what are you doing? What are you up to? Oh, I'm watching this guy on YouTube. The same guy from the other day? Yeah, bro. Yeah, we're just we're watching the markets together. The markets? You mean like the stock market? Well, yeah, kinda. There's more facets to it than that, but in a general sense, yeah, we're watching the stock market and learning how it moves and potentially make money or lose money, but it's what we do. Oh, that's kind of cool. Yeah, man, check them out. Channel link. Again, no mention of membership. Then they check out some videos. Oh, he goes live all the time. I might check that out. Or, oh man, he's got some 2-hour videos. I'm not fucking watching that. Oh, but there's a 10-minute video. I'll check that out. I'll watch that. Oh, he's recording the Dow Jones is what it looks like. And, oh, well, the Dow's over here. It's like, oh, it trades into that. And then, oh man, it shoots up there. That's interesting. How did he know it was going to go up like that? And then they see, well, I don't have my YouTube up, but there's a button next to my name below the screen. On your screen, it says join, right? So they'll see, oh, there's videos I can watch that are only for members. How do I become a member? Done. Done. Sales is not hard. But what I will tell you is it's a process. You have to be patient, and you have to not be so, you can't bombard people with what it is that you want them to do. If I want people to read, if I want you guys to read, guess what I'm going to do? I'm going to post on my story that I'm reading. I'm going to post on my story, hey, I'm reading 48 Laws of Power today, to get you seeing the idea that, hey, John's reading, and he's reading again, and he's reading again. And then hopefully this was the idea of mine. Not that I want to sound egotistical, but this was the idea that I had in mind. Oh, John's a really good trader and a really good teacher, and he reads all the time. Maybe if I want to become a better trader, I should read some too. That's what I wanted to do. I wanted to lead by example and to get you guys into reading. Not just tell you, but actually show you. Hey, here's this book I'm reading. Here's some quotes. Here's some things that I'm learning myself. And if you want to learn it too, go check it out. It's very simple. But it's not something that is done overnight, bro. And that's what I've learned too. Does that make sense? Are you guys getting some free sales training today or what? Are you guys getting some sauce today or what? This looks like shit. At least on a 5-minute time frame. People do business with those they know, like, and trust. Word of mouth tends to be from people within your tribe. The in-group tends to be who people listen to, whether they're right or wrong. I think it depends on how well the person is doing. Trust and trustworthiness is way better than empty, flashy promises. Yeah. No, I agree. There's a lot of things I don't promote. There's a lot of things I don't promote. You guys don't see me promoting fucking credit cards. You know, I have my own opinion on credit cards. Not that I want to get into it today. I talk briefly about it in my book, but you know, you see a lot of people, you should get this credit card. This is the best credit card. In my head, I'm like, bro, fuck credit cards. Altogether, fuck them. But there's a reason for that. But at the same time, I also know that if you know how to use a credit card the right way without getting your fucking face ripped off, then I'm okay with that. I'm basically an advocate for, if you don't know what you're doing, don't do it. But if you know what you're doing, then it's cool. So like, for example, 18 years old, you work at fucking McDonald's, don't take out a $5,000 credit card with 30% interest. Don't do that, right? Don't do that. But now if you're, I don't know, Say you run a business and you got a business credit card, you got 1% cash back, you got a shit ton of money coming in, and you want to build business credit and you know how to finesse that. Great. Then you do that because you know what you're doing. Right? So a lot of the times you don't see me promote credit cards because I think credit cards ultimately do more damage than good in general. Okay? Because I'm not gonna disagree that there are people out there who finesse and know what they're doing. I'm not gonna deny that. But I would say 80 to 90% of the time, people use credit cards the wrong way and they get their face ripped off. Late fees, interest, and they end up wasting a ton of money. And I don't think that's right. It's not right. Okay? I don't want you to be fucking poor. In case you haven't noticed that, I don't want you to be poor. I want you to have money. I want you to build wealth. But I'm trying to teach you things slowly over time. To not be an idiot with money. To actually get some fucking bread. That's what I want for you. And here's the real secret. Here's the real secret. Are you ready for this? Are you ready for this? Drop a 1 if you're ready. Or no, sorry, a 2. We did a 1 earlier. Drop a 2. If you're ready for the final secret or gem for the day. Think about this. If you're Netflix, if you are Netflix or any type of service that is like a monthly subscription, cell phone services, cable or whatever, even like YouTube, there's the YouTube subscription that you have here, or like YouTube Premium or whatever, stream, like Twitch, maybe you follow some Twitch streamers, great. If you own that, if you're the CEO of Netflix, you grow a business by doing what? You obtain customers and then you maintain customers, right? You obtain and maintain. I made a video about that. So the next thing I'm going to tell you is not on the obtain part, but the maintain part. How do you maintain your customers? Well, obviously you provide value and you give them more than what they paid for and all these things, right? But here's the secret on the back end. You want people to be financially literate so that way they don't cancel their subscription. Because I've seen that happen all the time. John, I got to cancel my subscription because I can't afford it. All right, no problem, man. Have a good one. No harm, no foul. Because I will tell you, there are subscriptions out there that are pretty fucking expensive. Okay? And expensive is relative, but you get what I'm saying. Like there's very expensive subscriptions out there. Hell, even car payments, bro. $500-600 a month for some shit plus insurance. It's expensive, right? So here's the thing. If I'm Netflix or any type of subscription service, I want you to be literate enough to be able to make room for the subscription. Because you know what that does? If your customers are literate enough to keep your subscription because they want it, then that makes you more money because they're not going to cancel their subscription. Think about that. Think about, let's just say Netflix, for example. Netflix way back in the day, like 10 years ago, I think it was like $10 a month. Let me ask you something. Who's going to cancel their subscription at $10 a month? Nobody. It's only $10, right? That's how a lot of people think. So think about that. If the subscription is, let's say, really cheap, right? They're not going to cancel. If it's super expensive, they will cancel. So there is finding the right price. It's hard. Okay. But what I'm saying is, I'll boil it all down to one sentence. Okay. If the members here get good with money, then you'll always have money to pay for the subscription. And if you always pay for the subscription, then that means I get to make money too. So it benefits both of us. You purchasing a membership here benefits me, right? I get a cut from that. YouTube gets their cut. I get my cut. It's, that's how it is, right? And the thing is, if I teach you how to be good with money, live on less than you make, finesse the absolute fuck out of the market, pull some bread out of the market, you're not going to cancel your subscription. So the business I have here, so the channel I have here benefits me too. So by teaching you financial literacy, that only helps both of us. You get good with money, you don't cancel your subscription. We both win. Now, how's that for transparency? How's that for transparency? So it's only in both of our best interests to get good with money. So anyway, that's going to be it for today. We may get some movement here in the final hour. Oh, look at the Dow. Look at the Dow. Weak sauce. Weak sauce. And the Nasdaq, it's hard to say. We have some highs up here, though. Well, that's disheartening. Oh, we didn't look at that. We have a higher high there on the S&P, and we have a slightly lower high there on the Nasdaq. So that was indicating manipulation on ES. Wow. The leg leading up to this high is here. So like that whole thing put together could be seen as a later mitigation, but I'm going to leave that alone. But just looking at it though, it looks okay. But yeah, I don't know. Again, this is what I'm going to leave you with. If I had to pick a direction today, it'd be short. But I would absolutely not be surprised at all if I'm wrong and we go higher. I really don't know. I don't have a strong bias here. Liquidity down here, distribution up here. We're kind of in the middle. So from this particular point, I do not know. But if I had to pick a direction, I think lower would be it. But if it goes higher, don't be like, oh, John's an idiot, right? It's just, I could be wrong. 3, 4, 5, 6, 7, 8. Honestly, this is probably tweet of the fucking year. I might be a little egotistical about that because, look at it. Fucking look at it. Okay? This might be tweet of the year. But this could be our 8th day in a row that gold is down, which I wasn't trying to do. Okay? I wasn't trying to do that. That was only a small time frame. And I believe I recorded that and showed you. But anyway,
I was not expecting this monster of a sell-off. So I'm not going to say that I called it, because I did not. But if there's ever been a chart that shows you to leave a partial on, it's this one. It is definitely this one. Because even a partial for the last couple weeks, you would have absolutely destroyed this trade. So I guess 1804 is next. 1804.60, I guess. Maybe even 1800. Looks about right. So I guess we'll see. I'm just curious to see how many days we're going to print lower in a row. Like consecutively. That's disgusting. So, Stephanie, what I was drinking earlier was a rainbow sherbet. Right? Rainbow sherbet. The white gummy bear is their best one, in my opinion. I used to drink Bang, but I stopped, and Kroger doesn't even have them anymore. Once they lost that lawsuit to Monster, it was over. It was fucking over. But Rain, and I'll do a Monster every once in a while. It's just Monster doesn't have a lot of caffeine. Neither does Red Bull. So, Rain is the only one that has 300 milligrams. So, that's what I roll with. But that'll be it for today, man. I feel like we talked about quite a number of things today. A little bit of business, a little bit of not marketing, but a little bit of word of mouth, and a little bit on sales, and all that good stuff. So if you haven't already liked the stream, please do that. That would be good. 25 votes, 72% said yes, 28% said no. So the consensus is bullish December. All right. We'll have to see. We won't know until January. We will not know until January, but that's going to be it, guys. I don't know what the short would be, to be fair. And again, that's why I'm saying I could be wrong, because I don't see what the short would be. This looks terrible, and the 15-minute doesn't really have anything either. So I'm just not sure. I just don't know. So with that being said, we'll be here again, not tomorrow. Thursday, you'll get like the tier 2 and up. We'll get your next market review. Friday will be our next stream. And don't forget, you have until the 15th. You have until next Sunday to upgrade your membership from tier 1 or 2 up to 3, because 1 and 2 are all being canceled on the 15th. So don't miss out. All right. Oh, they're doing that test bullshit. Did y'all get that too? Did y'all get a national wireless emergency alert just now? Did y'all get that? I meant to turn my phone off, but I didn't do it. Y'all got it? Yeah. I just got it too. Well, the lizard people are at it again. But anyway. Y'all be good, man. I'll see you on Friday.
I'm not ready yet to let you go.